I'm just having a quick look at the Uscad pair for the US session for the 30th of October. Now, I would imagine this is a news event. I haven't studied the Uscad pair, nor do I trade the US session. It tends to be a lot more volatile because of reaction to news and the overlapping of both European and US session. So a lot of money in the market. All right, let's have a look. See click. That's the last channel. We'd expect it to bounce around this zone, which it does in fact do. I would have an entry order sitting off here. I wouldn't trade news. I trade with a very small stop. Unfortunately, news events can be very aggressive in their formation. I prefer for the market to settle back to some degree of normalcy before moving forward. So a couple of minutes either side of significant news events. Okay, so there's your entry trigger. It get activated in that wick. Then we need to assess your take profit level. Once again, I take bites. I'm not an overall run. It's up to you how you want to trade it. To me, that's the last channel. I'm expecting the market to come back through here. There's no significant move against the short run through there until here, and you get a telegraphed response. We should at this point have continued down. I would adjust my take profit based on this here being the 50% as opposed to the pre-existing channel. The current channel bounced there, it pulled back to that value, take profit. So that is a 31, so 30 pip run. Our next trigger is the next leg of the short, which is the top of this channel, which is the bottom of that channel. So from a purely horizontal support and resistance point of view, that's what you're looking at. Okay, so the market bounced here, broke there. As it broke, people took trades in place by way of entry order, and the market has reached back for it multiple times before dropping off for the second leg of the short. Okay, so I would have an entry order on that high. So let me delete that, on this high here, which would be activated here. The market doesn't bounce aggressively. I'm not a fan. I prefer it to bounce like this, but you get what you're given. Market fills through there, pushes down. I'm expecting a bounce around this point to this point, and as you can see, we have one through there and we have one through here. The last channel was through that zone. So put your channel tool in place. We're expecting it to bounce here, hopeful of it coming down to this value, but you want to take profit there and look at another entry. That is 23 and change, so 22 pips. I think the last one was 31, so you got 53 pips for the short move after the parabolic move through here from the news event. I do not trade the CAD, please take that into note, and I would expect relatively poor movement through here if the Northern American market is not open. Okay, that's my take on the channels. Bear in mind, when you're assessing channels, always look at the last channel. So we broke this one down here. So it should bounce there, but we should also have a look. This market bounced there. We're expecting it to bounce somewhere between there and there, use that to look at the previous bounce point. So progressing through the night, you've got a channel through there. We'd expect it to bounce at this point, which it does indeed do. I understand that it fails away pretty aggressively after that. If you're looking at market failure and trying to get in for significant moves, you're losing high probability take profit points for days when the market doesn't go as aggressively as that. To me, this bounce point is a high probability bounce point. You do not know the extent of the pullback here. If it came back through here, or even reversed, then your entry position, which would have been triggered from that double tap, would have been lost without profit. Okay, hope this has been helpful. Good luck with your trading.